I think the market do give out blueprints, and in today's video I want to show you how you can easily trade breakout structures, right? So this is a very simple video that I believe most of you are just going to find this more interesting. Now real quick, let me just show you something. Let's say you see the market giving us this kind of a structure, giving us a higher high, higher low, higher high, higher low, something like that. So if you want to take your entry, basically we should be looking for breakout structure out of this downtrend, right? So that being said, let me show you something. Now there are a couple things that we need to add, that is couple confluences that we need to add when looking out for entry structure. Remember, this is a bullish market, but the market came back to create that higher low with a downtrend, right? So if that's a downtrend, so we need to incorporate reversal structure, whether you're talking about head and shoulder, inverse head and shoulder, double bottom, or even a double top, right? So I'm going to give you the easiest way you can let's start with the double bottom, right? So this is it. Let's say the market came back, and in fact, let's just now magnify this downtrend, this one right here. Okay, so we had this market came down to retest this support of ours. Now once we see price doing this, giving us a double bottom right there. Okay, now most articles do say that when trading a double bottom, wait for price to take out the neckline, and that's when you take your entry position, something like this. Wait for the market to break out of that neckline, and you take your buy position, and of course your stop loss below this. But then I think when you do that, most of the time you'll find that your stop loss definitely is going to be big. So I'm going to show the easiest way that you can have a tiny stop loss when trading this reversal, right? So the first thing, we have a double top. Double means two, right? We have this bottom right here, and we also have this bottom right there. So if we have two, that means, let's just say two, take your entry of the second touch. I don't know if you guys understand. Double bottom or double top means two. Double means two. So if that's it, two, we're going to take our entry of the second touch. Most people say take your entry of the third touch, but we'll come to that, right? So double, or double top, double bottom, we're going to take our entry on the second touch. This is what I mean. Let the market break. Once price has broken, then now we anticipate a reversal, that is a pullback, sorry. Now when we see a pullback right here, then that is where we look for our entry. Bear in mind, now we have a trend right here. Okay, now if we have a trend, this is our first touch right here, and this is our second touch. I hope that makes sense. Now initially we took our entry right there, but now we're not going to take our entry right there, because that means our stop loss needs to be all this, that is big now. But then if we wait for the second touch right here, then our stop loss needs to be below the new support level that the price will have created, somewhere around that. I hope that sinks in. And it's just the same as when we reverse this screen. So we have a double top, you see, let the market break, then give you second touch. That's when you take your entry, right? Now let's talk about head and shoulders. Head and shoulders real quick. This is our downtrend basically. So we anticipate price came down, then went back, created a new high, right? Then came down, then went back, respected that new high, then did this. Now if you see, this is our head and shoulder. So most articles says wait for price to take out a neckline, something like this. That's when you go in for your buy position, when price takes out a neckline, and then they say put your stop loss below the right shoulder. But then that is not what we're going to do. Remember, double top and double bottom, we said there are two. Double means two. Now head and shoulder, we see three things. That means we see the head, we see the shoulders, that is two shoulders and the head, right? Head, shoulder, shoulder. So those are three That means we're going to take our entry on the third touch. I hope you guys get that. So look at this. We had a head right here, we had a head, we had shoulder, and we had a shoulder. So those are three things, right? So if we have three, that means, like I say, we're going to take our entry on the third touch. So have your trend from your head, make it pass the right shoulder, something like this. Now if you took your entry when price broke out of this neckline, you see definitely you're going to see price going to pull back, something like this. Now once you see price pulling back, then that is where you look for your entry properties. Have your stop loss now below the support level that price has created. Let me just flip the screen to talk about head and shoulder. Now there are certain scenarios. Let me just delete this for you guys to see. We have different scenarios. Okay, let's say we had a level right here. In fact, let's just say price did this. We had price gave us a lower low, lower high, lower low, lower high, and of course now this is the trend. We are still talking about this downtrend right here, this one. Okay, so once we spot this kind of behavior, we anticipate now price probably respect that right there. Now our anticipation is price to go back and break. Now if you look at this, we had price creating a new high right here. Then that is when price broke out of that new high. Now mark this, when once price create a new high, that is it. Now look at this. This is a left shoulder, this is the head, right shoulder. So if you take your entry off this break, then your stop loss is going to be below that. But then remember, we said head and shoulder, take your entry on the third touch, anticipate that correction phase, because price is trying to print a new structure or a new trend. That's when you go in for your entry. Now that's another second scenario. There's also another scenario where price don't create new high, price just breaks out of a trend. I'm talking about this scenario. We see price giving us a lower low, lower high, lower low, lower high, and then guess what, we have our trend right here. Now into this scenario, price don't respect this trend just the way we did see previously. Then you see price doing this. Now this time price doesn't do that. You see price just breaks out. Now what will you do? Now onto this, just wait for price to create a retest, right? Now once you see price creating a retest, now that is where you see now the head and shoulder has been formed, meaning we've seen price has given us a left shoulder right here, head, and now price has gone to give us a left shoulder. Now we're not going to take our entry. Remember, head and shoulders, we don't take our entry off the second touch. We're not going to take our entry right here. Okay, reason being, we just need to have a confirmation, because now this is the time that price has created a new high. Remember, it just broke without giving us a new high. So that's when we look for our entry. I mean our trend line, have it right there. Unless price takes out this, something like this, then now we wait for your third entry right there. That's when you take your buy position. And if you flip the screen, you see it making sense. First touch right here, second touch, third touch, same as double top and double bottom, right? Let's say we had our resistance level right there, then you see price doing this, came down, went up, and now did this. Instead of, in fact, let's just do this. You see price did this and just broke out over this level, this high. Initially, let me just let's just say this was the previous high. We saw price probably price did this, came back, created that new high. No, sorry, let me just give you a good one for you guys to understand. We had a high, of course. After marking that high, that means there was this kind of price reaction, right? So now if you see price just took out this, make sure you wait for a retest, second touch, go in. I hope you guys get that. I think if you get confused, just rewatch the video, you see, and you'll understand. I'll repeat another scenario. Price does this, breaks without giving you a new structure, or without respecting this resistance level right there. because most of the time we anticipate when price does this, price goes up, then we anticipate price should go back, maybe to create a double bottom before we see price going up, right? That is what we do anticipate. But then this time you don't see price respecting that, you just see price breaking out of that new high, something like this. That's a V. There's also a strategy called a V-shaped type of strategy. I used to trade this kind of strategy before, but then this is it. If you want to trade reversals, I mean breakouts, you need to incorporate reversals. So when you see this kind of a scenario, anticipate a retest right there. Okay, now once you get a retest, we don't take our entry yet because we don't see anything, right? Make sure price has given us, let me just delete this, a clear indication just to confirm that this is just an uptrend. Let's just remove this. We need to confirm that this trend is valid and this breakout was valid. That being said, we mark this as now the new high right there. Okay, now when you've marked that, wait for price to break out of that. Once price has broken out of this high, that means price has started creating a new trend. That's when you bring in your trend line. Okay, and then guess what, wait for the second touch right there, the third touch right there. So this is where now you look for your entry, something like this. So I hope this was simple, and if you have any question, let me know in the comment box below. Check out my Telegram link in the description box below, and adios mi amigos, peace.